Hey there, welcome to RateWatch for Thursday, 29th of July, 2010. I'm your host, Chris Jones. Here's what's happening. Today, for a wonder, we have a market that is up. That's right. Remember, we're talking about the bond market, not the stock market. When bond market goes up, mortgage rates fall. And that's what's happening today. We're up about 15 basis points. We have been up as much as 26 basis points, setting a new 52-week high. And why is that? Well, because unemployment claims are in. Unemployment is a big factor in bond rates, and today is no different. The new claims are 457,000. That's a little bit less than they were in the last week's report, but not as much less as the markets were expecting. And continuing claims exploded to the upside. We're at 4.56 million people continuing their unemployment claims. Now, why would that be good for bonds? Well, remember, the mortgage industry is bizarro world. If it's good for the economy, it's bad for mortgages. If it's bad for the economy, it's good for mortgage rates, generally speaking. Not a hard and fast rule, but it's a pretty good rule of thumb. So, all this bad economic news, it looks like this recovery is not generating jobs, which is the one thing that it could do to really get the economy humming again. So, what's the story for the future? Well, rates are pretty much flat, headed slightly downward. We're about 4.5% on the 30-year. That's both conventional and FHA, and about 4% on a 15-year. Absolutely fantastic rates. Let me show you something. Here's a chart for the last 6 months. Notice this right here. We're way at the top of the range. That's our Fannie Mae 4.0 bond, and that chart is courtesy of mbsauthority.com, the best place to get that information. Here's another chart. This is the government 30-year bond. Note, again, we're right up here at the top of the range. What does that mean to rates? Well, it means that they're about as good as they can get. They're not going to stay here forever. So the question is, how long will they stay here? If you're thinking about making a purchase, that's a critical question. I have your answer, and here it is. Thank you, Johnny Carson. You need a professional to pay attention to this stuff. You can't be watching all day. Rates change every 20 minutes, all day long. And you really need someone with his finger on the trigger. That's what we do here at RateWatch. You can help us help you by subscribing to RateWatch. Web address, thechrisjonesgroup.com. You can subscribe there, or you can shoot an email to chris@thechrisjonesgroup.com, and I'll get you hooked up. As always, you're welcome to check out the RateWatch channel on YouTube. So till next time, I'm Chris Jones, and I'll be watching the rates.